stock review. Well, really, it's like Fallible portfolio review. Too many claps. But in this video, which we do every month, I'm gonna go over some of the past positions we talked about, see how they're doing. Gonna give you some new stocks I'm looking at too. But before we just jump into it, definitely check out this FOMO trading guide if you haven't already. It's a free download. You just go to the page that's linked in this video or down below, enter your email and I'll send it to you. And this guide is gonna help you control your emotions. It's got tips and tricks and steps, all the good stuff you need to keep your mind under control. So please go check it out. But our first stock is Workday, formerly the worst stock in the world, but now it's one of my best performing stocks. See how that works out? It's because I'm fallible. See, get it? So clever. So I got into Workday back on December 3rd, right here at 167. It's now trading around 190, which is a percentage increase of over 13%. Not bad. And if you remember, I first talked about Workday on that December 18th video, so right here. And I was saying if I was getting in at that point, I would probably wait for it to break this line right here, which it did, and then it shot up. So that's awesome. When you're investing with momentum on your side, good things usually happen to the upside. That's the point of momentum. Now, Workday is still ranked number 2 out of the NASDAQ 100 in terms of TSI, which means its momentum is still really strong, and I'll likely continue to hold it. Now, if you don't know, the system I use is called the NASDAQ All-Stars. And what the NASDAQ All-Stars does is it ranks the NASDAQ 100 based on momentum. And the way it measures that momentum is with a TSI number. So when the TSI right here is 19 and it says it's ranked number 2, that means Workday is the second highest momentum stock in the NASDAQ 100. And all the system does is that it rotates every month into the highest momentum stocks. That way you're always investing in the winners. Now, obviously there's more rules that go into that, but that's the basic gist. So every month I rotate my positions and an email gets sent out to our Fallible community about the new positions that I'm getting into. And then we do that every month, and there's a webinar and emails and there's a bunch of stuff. If you want to learn about that, just sign up for that FOMO guide and you'll get some information about that as well. NASDAQ All-Stars. It is phenomenal. I love it. But anyway, Workday has earnings coming up on the 28th. Now, do I know what's going to happen in earnings? No, I have no idea. I haven't researched it and I don't need to because my strategy is based off momentum. Workday still has the second highest momentum in the NASDAQ 100, so I'm probably going to hold through earnings. Now, with the earnings report, literally anything can happen. Normally, if a stock does have high momentum and the trend is up, like if you look at Workday right here, the trend is pretty solid. Earnings usually work out in your favor. But the problem is when they don't work out in your favor, your stock drops hard. And that's happened before in this system. I forgot which stock it was, but there was an earnings report that came out and it dropped 20% immediately. Now, did that ruin my portfolio? Of course not, because I'm sized properly. That's what we go over in the NASDAQ All-Star system as well, how to properly size your positions. Risk control is always the #1 most important thing because of situations like this. No one can predict what's going to happen in earnings. You can make an estimate, you could do your research and make a probabilistic bet, but that's all you can do. You're going to be wrong some of the time, no matter who you are. Unless you're on the inside, then you're going to know exactly what's going to happen, right? But then you also go to jail, so don't do insider trading. But anyway, the point is I'm not worried about earnings. Whatever happens, happens, and I know I'll be okay because my risk control is in place and I'm following my system, which is the most important thing. Okay, next stock. Next stock is Xilinx. You know, I talked about this in the last video if you remember. So Xilinx, I got in on November 1st, all the way back here. And since then it's gone up almost 40%, so it's been a really great position. And the great thing is how long we've been in this position. It's been 107 days and we've just held through and it's really paid off. And this is another reason why I like using a systematic strategy like the NASDAQ All-Stars. Because when I was using a different strategy before, which was more discretionary, one of my biggest problems, which I found by going through my trade journal, was that I couldn't hold on to positions. I would jump out too early. Either my stops or targets were too tight, something was always wrong. Or I would see an earnings report come up and I would try to analyze it and be like, nope, I shouldn't be in this, and jump out. And the problem is when you're in and out of stocks too quickly, you lose the big gains. You know that Jesse Livermore quote, right? The biggest profits come from sitting tight. And the hardest thing to do is sit tight. And by sitting tight, he means staying in that position. That was the hardest thing for me too. And you see those examples, right? Where they're like, oh, if you bought Amazon 20 years ago, you would have this much money now. But if you're in the market actively investing, what are the chances that you held Amazon through all those ups and downs? very slim. Even if you were passive, did you really hold through 2008? It's not easy. Trade management is the toughest thing in this game, and it's the most important. It's way more important than picking stocks or any of that. Picking stocks is the easy part. So having this strategy really helps systematize how I manage my trades. So instead of getting knocked out like I usually would have in this area, or I probably would have just got bored and said, oh, this stock isn't going anywhere, let me get out of it. And if I got out around here, like I would have in my old strategy, I would have missed this earnings report, which shot this thing straight up. And I was talking about this in the last video where I said I didn't know what would happen after that earnings report, because when you have such a huge jump like that, what could happen is that it goes back and fills the gap, or it can go sideways. But in rare cases, when the stock is truly strong, it just keeps going up, which is exactly what Xilinx did. And that's why we're sitting on what, a 40% gain? And if you look at the TSI ranking, it is still #1, and it's #1 by a wide margin. Next one on the list, Workday, is at 19, Xilinx is at 25, almost 26. And Xilinx has stayed at #1 on that list from the time I got into it, which again was what, 107 days? This is a strong momentum stock. And with its ranking so high, we're gonna continue to hold it. These are the positions that you dream of. These are the best case scenarios. You just hold it and it just goes up. You don't gotta worry about it. It's beautiful. Now, of course, there was some trade management along the way, because even though a stock is going up really fast and it's really strong, you still don't know what's gonna happen. CEO could die the next day. So always what you wanna do is take some chips off the table, take some profits. And that's exactly what we did. First, on the 24th right here, when Xilinx hit our first target, we took 25% of our position off. Then we did that again on the 12th because Xilinx hit our second target, so we took another 25% off. So right now in this stock, we only have 50% of our original position because we've been selling along the way as it keeps going up. And that's the best way to lock in profits, because if you're not selling shares, then all the profits you see are just paper profits. They can disappear like that or like that. My fingers are frozen down here. God. So built into our system is a systematic way to take those profits. We set our first target 20% above our entry price. And once that first target is hit, we sell 25% of our position. And then we move our stop to break even after that first target is hit, because you do not want that thing doing a full round trip, breaking past that break even point, and then you end up losing money. Then we have a second target, which is 35% from the point where we just entered. Once we hit that target, we sell another 25%. And then we again move our stop to where the first target was. So not only are you taking profits at the top, you're also reducing the amount the stock can fall before you completely get out. So you're protecting your profits from both ends. And again, this is all trade management stuff that I would screw up time and time again when I was more discretionary. The best way to figure out how to do it properly is to just back test. So having a first target at 20%, that seems like a random number, but you take a number like that and you do back test it and see how robust it is and if it works over different cycles, over different periods of time. It doesn't have to be super complicated. 20% is just 20%. There's no technical level or some super complicated fundamental reason. It just is what it is and it works. But anyway, with Xilinx, how strong it is, we will continue to hold it. If it's #1, we'll keep holding it. Next stock, SBUX. Everybody's favorite coffee maker. Now, SBUX, our Fallible members got in on January 2nd, right here. And since then, the stock has shot up almost 10%, so not bad. So how is the current momentum on the stock since we got in? Well, SBUX has now dropped to 8 on the list. It has a TSI of 11.5 almost. So it's not as high as the other two at 1 and 2. 8 is a little lower down the list, but what does that mean? So the way our system works is once a month we rotate, right? We rotate our positions, so we're always with the highest flyers. So if SBUX drops from 8 to below 10, that's when we would send out the email in a few days now. We do it the 1st of every month, and our members would know that the system is rotating out of SBUX because it fell too far down the TSI list, which means it doesn't have the strongest momentum. Then we take that money and put it into one of the top 5 stocks with the highest TSI. But here's the thing, if SBUX doesn't drop below the top 10, then we'll just keep it. Sure, it's not the strongest momentum stock, but it's done a good job. It's almost earned 10%, right? And what you don't want to do when you're trading is switch positions too much. Because you can think of a system where you switch into the highest momentum stocks every week. But if you did that, the trading costs would eat you alive, and you would never be in one position long enough to realize actual good gains. Which is why one of the rules of our system is that it has to drop a certain level before we rotate out. out. For the most part, we just want to be holding these things. Whether the TSI ranking is number 8 or number 3, there's a difference, but it's not that much of a difference. You just want to be in good stocks and you want to hold. So that's another thing that a system helps you with. It prevents over trading. Over trading is a killer, especially when you label yourself a trader, because as soon as you do that, you think you need action. I used to do it all the time in that old strategy. I'd get bored. Stock wasn't moving by whatever random definition I came up with that day on what moving meant. I would jump out, get in something better, supposedly. Usually not. So this system cuts all of that out. So those are the 3 stocks I'm looking at that are in the NASDAQ All-Stars portfolio. Now I hope you take this information and analyze it yourself and plug it into your own strategy. Don't take this as advice to buy anything. These are just ideas. And I tell this to the All-Stars members too. The portfolio and the service is only there to help teach you how a system works. It's like a simulation. You get to watch game footage in real time and you get to see what I'm doing. But never ever should you be taking advice and following things blindly. And I'm not the one giving advice. It's all about learning. And along those same lines, if you want to learn how to control your emotions in the market, don't forget to sign up for this FOMO trading guide. It's free. I'll send it straight over. Definitely do that. And while you're on the email list, you will also get information about the NASDAQ All-Stars. You'll learn more about how it works, how momentum works, how the TSI works. There's like a set of 3 videos that I end up sending you that explain everything about it. And it's just a great learning experience. So if you want the FOMO trading guide, you want that, just sign up. And if you like videos like this, going over portfolios and trades and all that, then make sure you subscribe to this channel and hit that notification bell so that you get an email notification when future videos come out. We're publishing every single day about stock market and business. So subscribe and I will see you in the next video. Stay fallible out there. Bye.